PayPal stock is down 26% so far in 2025, and investors are asking me if PayPal stock is a buying opportunity for 2026. I'll answer that question in this video. I'll share with you PayPal's longer-term revenue growth and cash flow history. I'll look at its return on invested capital. I'll share with you my updates to my fair value calculation for PayPal stock that I made today, including one big adjustment I made this morning. Additionally, we'll look at the market multiples for valuation to come to a conclusion on what I think about PayPal stock as a buy, hold, or sell for 2026.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So PayPal has done an excellent job in boosting revenue. It's almost tripled over the previous decade, increasing from $10.8 billion in 2016 up to $32.9 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of 13.5%. Recent quarters, their revenue growth has been slower than that, and I expect it will continue to be slower than where it's been growing over the previous decade, but I expect PayPal will continue to generate excellent near double-digit revenue growth figures for the future. One of the main reasons for that is PayPal's biggest competitive advantage is for e-commerce, for online shopping, because of the convenience it adds when you're making a payment to log in and pay with PayPal instead of paying with your credit card and having to input all that information. That advantage is glaring when you're shopping online and almost non-existent when you're shopping in person. And so as people spend more money online, which that's the forecast I expect and many analysts expect, is especially in the United States, the percentage of overall spending will shift online continuously for the next few decades at the very least, as a growing share of shopping moves online because of those convenience advantages. Of course, there are risks in that PayPal could be disrupted by many up-and-coming companies, including many large players like Apple with Apple Pay. However, I've adjusted for that, and I'll share with you a little bit later in the video how I adjusted for that increasing risk. So PayPal's return on invested capital has been solid and increasing from 11.7% in 2016 up to 21% in the most recent trailing 12-month period. And a good rule of thumb for ROIC is you want to compare it with the company's weighted average cost of capital, and you'd like to see an ROIC that's above the WACC. Thankfully for you, I've calculated a weighted average cost of capital for PayPal, and according to my calculation, its weighted average cost of capital is 13.3%, and comparing it with the return on invested capital, you could see it's comfortably above 1, closer to 1.5 to 1 ratio, which is solid for a company. And especially when we look at valuation, that's an attractive level, because PayPal stock is not one of those stocks that's trading at a premium valuation. And so when you're getting these kinds of solid numbers for a stock that's trading at a discount, that makes it a lot more attractive. Now, PayPal's cash flow from operations to sales is a concern. It was at 29% in 2016 and is consistently trending downward to 19.6%. One of the reasons for this trend downward is because a greater percentage of PayPal's revenue is coming from non-branded sources, and those sources don't generate as high of margins as legacy sources. When you're using the PayPal account to log in, it generates a higher cash flow per dollar for PayPal. Additionally, the opportunities to monetize Venmo could fail to materialize, and Venmo is less attractive to PayPal in terms of profitability compared to the legacy PayPal login and payment through PayPal services. So this is something that is concerning, although the number itself is solid. 19.6% cash flow from operations to sales is a solid number. The concern is the trend downward. I mentioned valuation, and look at how cheaply PayPal is selling at. When measuring on a price to OCF, price to forward price to operating cash flow, it's trading at less than 7. This is the kind of valuation where Verizon and AT&T are trading at. These are zero growth companies. When you measure on a forward price to earnings basis, it's trading at 11.3. Again, relatively undervalued. And one of the main reasons why PayPal is trading at such a cheap valuation is because of the risks I highlighted earlier with larger payment processors like Apple and other payment innovators are encroaching and growing much quicker, and investors are concerned that PayPal's relevance could continue declining. Although to offset that, PayPal has been adding monthly active users for several consecutive quarters now, and it exceeds 400 million monthly active users, and that network effect is extremely valuable in keeping customers engaged. Significantly, my discounted cash flow valuation model also points to undervaluation. The intrinsic value per share I calculated is $100 for PayPal compared to the current market price at $63. Now, you might notice the intrinsic value per share is lower than it's previously been, and I made an adjustment to account for the increasing risk with PayPal stock. I added 25% to the company's beta. Beta, remember, is a measurement of risk, and since PayPal stock is becoming more risky, given the increasing innovation from competitors and substitutes, I accounted for that by increasing PayPal's risk through the beta at 25%. And of course, that impacts the weighted average cost of capital, which is how we discount all the future cash flows. And so it caused a decrease in the intrinsic value per share. That said, the stock still looks significantly undervalued, even after accounting for the added risk. So to answer the question, yes, I do believe PayPal stock is a buy and a buying opportunity for 2026 and beyond. Hey, thanks for watching. I truly respect every viewer who takes the time to seek qualified financial analysis. Unfortunately, there are a lot of unqualified voices online giving unsubstantiated stock advice. My goal is to provide research that's grounded in data and professional training, not just what's popular. For those new here, I hold a master's degree in financial economics. I'm a CFA charter holder, an author, an adjunct professor of finance and economics. I've spent nearly a decade researching stocks professionally, and I'm here to help you make informed investing decisions. If you found value in this analysis, make sure to subscribe and consider joining the channel as a member for early access and in-depth members-only content.